Hi, I'm Bob Voss, also known as New Business Bob. Welcome to the New Business Bob Show. As you can see, I've got a guest here today, and the guest is my friend, Larry the Accounting Guy. And today we're going to be talking about a topic that a lot of new business owners have no clue what they are. It's called quarterly or estimated taxes, right?
Correct.
And that means at some point in time, you may have to be paying your state and federal income taxes not once a year, but 4 times a year. And Larry's here to introduce that subject to us.
That's right. So as your own boss, you don't have anybody withholding wages from your W-2 at the end of the year. So you get to the end of the year and all the money you made in your small business, you haven't paid any tax on that, and the government's going to come a knocking.
And because they don't like that. They want their money a lot faster, right?
So the rules are that you're supposed to have paid at least 100% of last year's tax or 90% of this year's tax before the end of the year, basically.
Before the end of the year. And most people do that on a quarterly basis, right?
If you do it on a quarterly basis, and if you project it out ahead and do it in even installments, you will minimize any penalty if you owe a penalty.
If you owe a penalty.
Right.
But the idea of this whole thing is that the state and the IRS want their money sooner than waiting till the end of the year. Is that pretty much it?
You are supposed to pay your liability as you go along. I have clients that take a percentage of their gross income. We figured out what their best rate is based on their gross income, and they set that money aside on a monthly basis.
Oh, so they might even pay monthly.
You can send it, the government will take it whenever you want to send it in, but ideally you would send it in at least quarterly.
Okay, so at what point does a new business owner need to start worrying about quarterly or estimated taxes?
Well, it depends upon what other income they have. If you're in the 10% tax bracket, you'd have to figure out what that liability is. For the federal penalties, they kick in at $1,000. We're in Minnesota. The Minnesota penalty kicks in at $500. So different states have different penalty levels, but ideally, it's foolish to pay a penalty. You're just throwing money away.
Right, exactly. So if somebody starts a part-time business, because a lot of people that are coming here are starting part-time business, not full-time businesses, and they may actually have other jobs in that as well.
Right.
So if this part-time business is making, let's say, $10,000 a year in profit for the whole year, do they need to file quarterly or estimated taxes?
So just running the numbers, if you make $4,132 in profit, that's about $1,000 between your income tax and your self-employment tax. You could be facing a penalty if you haven't had enough withholding at that other job.
Okay, but it varies per everybody. Everybody's different, right?
Tax rates, tax brackets are different. Yep.
Okay, but in reality, the $1,000 is where the penalties start kicking in for the IRS. And for the state, it's about $500.
$500 here in Minnesota. It's different by state.
Okay, and that's why everybody needs to be, you're starting a new business. Every new business owner needs to be working with somebody like Larry the Accounting Guy to help them through all this stuff. Because no offense, I don't have time to think about this stuff because I'm running my own business. Would you agree with that advice, Larry?
I would definitely agree with that advice. That's what we're here to help you with. We look at the numbers and tell you the things that you haven't thought of.
You're the best. Thank you. Thanks for watching this show. Thanks for watching the New Business Bob Show. And as you can tell, I'm going to have Larry back a lot because he's really helping new business owners get their foundation laid for their new business. Thanks for watching.